hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single
I'm here, I'm just working on stuff. But I'll be back. Morning, Nathaniel and Wendy.
My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock
I'll be
pick
back
trading podcast in my
in a
ears,
little bit.
guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily,
Yeah,
don't
we're
miss a
experts in
single
bonds
show.
today, Olga.
Sign up for the
I'm gonna be right back. I gotta go grab some water.
Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in
Okay, I'm
my
back.
ears, guiding me
I
through
got
my
2 minutes
hopes and
left on the
fears.
countdown. But I am gonna come over. Okay. We've had enough. We've had enough. Good morning, everybody. Rosa, Nathan, let me log in over here. I'm on Do Not Disturb. Okay. Hit the thumbs up button. By the way, there's like, what, 18 people in here, 19 people in here, and I am not buying a damn bond. It is funny because my one of the things that Dustin asked me in his podcast, I don't think it's out yet. Let me see. I don't think it's out yet. Picture of wealth. No, he hasn't released it. And investing experts should come out, by the way, probably next week. They'll let me know. They'll let me know. So they will absolutely let me know. But I don't see initial job unexpectedly slip. What did the markets do on this? Not much. I mean, markets didn't move. Ooh. Did it pass? Wow. I didn't know that it passed. And 3.8 trillion in tax cuts, including the extension of the tax bills. The most divisive proposal are the stricter requirements for Medicaid. According to nonpartisan, the proposal increased the deficit by 3.8 trillion. God damn, why can't these guys just fucking get on a goddamn... Sorry. Oh, I'm getting canceled for this. I mean, why can't they... These effing people. It's going to hurt. They're kicking the can down the road. And that's what the bond market is saying. And if you go and look at the bond market, let's look at the 10-year. Did it spike up? I mean, look at that. The bond market is telling you exactly what needs to be done. That is at 6 a.m. It passed at 7 a.m. What is it saying? I mean, do you want anything clearer? Okay, so we're going to include this. I got to include that story. Because, let's see. Look at the 10-year spike. If they want to redo the debt, I mean, that's... Morning, Chris. James Bond. My brother's name is James. By the way, that just puts a... Stock futures are a little changed, but I mean, let's put that into... I mean, the problem is there's just so much to talk about, and so... Morning, Carrie. Meat stick. I mean, here's the thing. I'm going to lose money. If we go into like a back down to the lows, I'll lose money. And I don't have the 60-40 portfolio. Again, the 40% that people had in bonds, it's providing a little bit of cushion for people that want to. It is what it is. And we're going to go to the core investments. So you've got Google up 1%. You've got iBit up almost 3%. You've got PanW up 0.2. That was a big loser yesterday. Palantir is up. I mean, it is what it is. But, I mean, technology and stuff, it's just getting killed. Yeah. It is what it is. Yeah, I mean, honestly, Chris, I don't blame you. I mean, you look at QQQ, and from a weekly perspective, it hasn't fully recovered. I mean, the Liberation Day strategy is great. Let's see if it got you out. Nope, doesn't have you out. Still has you in at 521, and you're at 512. So, I mean, several times during these, even these winners, you probably had a little loser, but it's a little wacky. Again, I don't think a year from now, I think we're fine. But if this tax bill does pass, the bond market's in charge. So, okay. I'm going to start stuff out. Let's see. I got to open up all these links. So, like I said, IBIT is up. And I actually did a scan in the 4-hour algorithm. And IBIT is the only one in the core portfolio that has an entry today in the 4-hour algorithm, which is bullish. Canadian Goose, Canada Goose, huge winner yesterday, 20%. I mean, you can't ignore it. We're heading into summer. I don't know what their products are like, blah, blah, blah. The year-to-date performance of the top 10, and I'll bring them up. I just can't publish them I can't publish them. I can bring them up. Urban Outfitters, killer earnings, up 15%. Snowflake is jumping. I did get rid of mine at 193, just so everyone's aware. It's up 10%. Very good. Bitcoin hits new all-time highs. And that was from last night. We'll go over that. I'll bring that up. Let's see. Nike. I mean, is it time to actually buy Nike based on this? Google's adding ads to its AI search. And so I'll talk about that. 3 utility stocks. I mean, you know, if you want stability, I mean, utilities are going to have stability. UNH, this was a good, I stole it. Just, you know, go over and follow me on Instagram. No, Navitas, Navitas. Larry. That one's going nuts, 156%. It's been up as much as 200%. I'm still focused on NVIDIA, and I'm still focused on the fact that they will probably make a sickening amount of money. CoreWeave has just been on a roll. We'll take a look at that one. I'm going to go over the Apple stuff. I'm going to go over the Apple stuff. This seems to have opened up Safari. We don't want that. Let me see. Yeah. Let's see. We're going to quit Safari. And Mark Gurman is he's the leading Apple kind of guy from Bloomberg. Just OpenAI. I mean, OpenAI just kind of ripped the rug out from Apple. So we'll talk about that. This is the launch video, and let's be honest, Sam Altman has been more right than wrong. He's kind of the Tom Lee of AI. So he's got an enormous amount of money to spend. We'll go over Apollo lists 10 things in the market that headwinds. Palantir just FYI, Palantir's still expensive. I mean, we'll go over that one. I probably should have put Palantir on my damn thumbnail, but you do have to worry about your losses. I mean, just be aware. Losses happen, and if you're going to lock in, UNH is a great thing. 10-year treasuries have gone from 4% to 4.6%. They were at 4.5%. So take your pick. Is it a panic? Long-term versus short-term. Again, stock futures are a little changed after the House passed the bill. It passed. So we'll take a look at that one. the bond rates. I mean, yesterday's 20-year auction was just a disaster. It was a disaster. I am getting positive feedback on this particular one. Oh, why didn't it pause? Bonus podcast. There we go. And just so everyone's aware, I did order. I'm going to start it out with a little lawn thing. Yeah, you like to look at those order blocks. I probably should mention this on the podcast. There's an app called Prospero. Okay, go look it up in your app store, whether it's the iOS or Google. Prospero, it's a stock app, completely free. I was on with their founder George last night on Spaces, and it's completely free. I mean, they have a great track record, and it's AI. It's driven by AI, and it gives ratings. So. You want an app to find new stock? Prospero. Let's see. I think it's Prospero. Stock app. There it is. Prospero.ai. Right there. It's a good app. They have a newsletter. The app gives you all the stocks, video product overview. They do a good job. The newsletter, I mean, they charge for the new. And listen, George is monetizing his stuff. It's worth it if this is your thing. George loves to talk about stock, so I find it funny. Yeah, great product though. Very well laid out. Super. User friendly. So, stock futures are coming back. Yeah. Okay, so I'm going to start recording. God, it's already 15 minutes past. Good morning. It is Thursday, May 22nd. I'm pretty excited, and let me get over my excitement. For those that know, I'm getting PGR, which is for those not in the know, it's called Plant Growth Regulator, and it's coming from Amazon. It's arriving tomorrow. I ordered a couple of weeks ago. It's expensive as hell. Like a bottle is $150. This is my first time using it. I haven't used it before. I did geek out with a couple of folks on email yesterday. But it's my first time using it. I'm mowing about every other day, 3 times a week at this point. So I shortened my height of cut. I need this stuff. What it does is it helps grow the plant out instead of the plant growing up. So I'm excited. Again, suburban kind of dad kind of excitement kind of stuff. I will take a picture of a golf ball on my back lawn at some point in time, and I am going to post it, and I am going to brag about it. So I am getting some kudos, by the way. I did a bonus podcast yesterday, 5 high growth stocks I'm waiting to buy, 2025 pullback watch list and video breakdown. I went over everything. There's a couple of things that I didn't go over though. A couple of questions. When am I buying? And what am I using to buy them? So I went over the 5 names. I gave you exactly, and I showed the charts. But it will be different for everyone. And do I know exactly when I'm buying? No. But it will be for each different one. And here's the key. And this is what I want to point out. And don't think that you have to subscribe. Again, it's a paid newsletter, but don't think that you have to. There is nothing earth-shattering in this. But if you want to support the podcast, you can go over and to Linktree and scroll down to the newsletter. You get a free newsletter every day, and I include the notes from this thing. But one thing I wanted to add that I probably didn't add in this one is I have to see the opportunity as rather large, even in those 5 names, because I don't like starting new positions. Okay, these are 5 names that I don't currently own. I'd much rather add to current positions that I have a thesis and I know have worked. The Buffett line, add to water your flowers, not your weeds. So I'd rather add to a current winning position than I would to actually getting into a new position. So it's a big caveat there that I just like to throw out there. But do I know exactly when I'm going to buy? No. But I will know. And it will be a technical reason more than likely. And fundamentally, these are high growth stocks, and they showed with the recovery where they can go. And they are up huge with the recovery. 30, 40, 50, 60% during the last month. So these are names that have that. When they pull back, I know in a good market, they're going to push forward as well. Are we in a good market? What happened yesterday? Long story short, the bond market told the U.S. government that the current tax bill should be a no-go. So Wall Street slides, Dow falls 800 points as bonds sell off and fiscal fears better sentiment. Okay? This is likened to when the British Prime Minister, who pushed through a budget that added significantly to Great Britain's deficit, bonds blew up. She was ousted from government in just a week. Okay, it's like the president getting ousted out of office for pushing a budget through. Go and Google or use Perplexity. Liz Truss was her name. The bond market is signaling the warning, okay, on Trump's big, beautiful bill. The debt is unsustainable, and the bond market is saying, hey, don't pass it. It's been an orderly bond market so far, but definitely the failed 20-year auction yesterday. If you were around, excuse me, let me take a drink of water. But if you were watching about 1 o'clock yesterday, somewhere in that neighborhood, stocks just went down. And the reason was the 20-year bond auction. Nobody showed up. Foreign countries weren't buying our bond. So that's the issue. Bond market rules the stock market. That's why the 60-40 portfolio is always good. And if you want to do it, Trump's big, beautiful budget bill just passed. Okay? As the bond rates go up, the market goes down. Yesterday, the 10-year, we can go and look at the 10-year. Let's go and look at this one. The U.S. 10-year Treasury, let's look at it. One day, look at it. It's spiking, okay? We've come back down. You want to know why? Because at 8:30, that's only 4.61 to 4.60. It's a fairly big move in the bond market. When you look over 1 month, see how it's spiking? Why? We haven't addressed the debt. Look at year to date. Okay, we haven't gone back up to 4.7 where we were in January. The stock market was up at a high level. So again, Trump's beautiful bill passed, and the stock market didn't change much. Okay, the stock market didn't change much. That's all happened this morning. So what's interesting, take your side on this. Okay, you've got to take your side. 10-year treasuries have gone from a little over 4 to 4.6 in a little more than a month. Shocking. Seems scary. But 1 year ago, the bonds were at 4.5. So you just have to choose your narrative. I'm choosing that, yes, with all of the uncertainty, with everything that's happening, and we'll go more into it, there is an issue. Okay? You do have to pick your winners. Now, this is an interesting graphic. The law of large losses. Remember, a 10% loss takes you an 11% gain to get back that 10% loss. A 20% loss takes 25% gain to get back that loss. This is why you don't want to hold on to losers. This is why before you buy a stock or an ETF, you say, okay, am I holding it for short term? Am I holding it for long term? And you need to identify, where am I going to get out? What's the downside? Where's the upside? That's what I do. Okay? That's what I do. And just so you know, I put this note in my notes. What's interesting about gold, as bond rates go up, the market goes down. Yesterday, the 10-year went up. No go for buying. I'm trying not to buy stocks when the bond rate is up over 4.5%. I think you can look at some gold stocks. And that's the note that I put in here is I went over and did GLD today, and I said, okay, let me look at gold. Let me look at the chart on gold. Let me look at, what Seeking Alpha thinks about GLD. And what's interesting, I've always done GLD, and I went down here and I said, let me look at what number one is, because GLD is number one. GLD was always the big one, and it's IAUM. Okay. IAUM, let's look at the peers, and we're going to we're going to just put in GLD. All of these other ones, I haven't researched all of these other ones, but there are ones, but we're going to put GLD. And we're going to just look at the comparison, okay? Expense rate of IAUM, 0.09. Expense rates of GLD, 0.40. And I went down, and the performance is fairly good. We can look at, let's put total return in here. So 3 year, you're seeing 1 year, it's about the same, 3.67, 0.79 versus 0.39. So maybe that the expense ratio is coming into play. You go to 3 year and it's 78% versus 76. So, again, maybe that expense ratio is coming into play. Now, this looks a little different 5 year, but it's because the IAUM only starts in 2021. So that's where it kind of swings out a little bit. But again, realize that's the case. But what I found interesting when I was doing my research is I went down to the description. And the iShares Gold Micro is an exchange-traded fund managed by iShares. The fund invests in commodity markets. It invests in gold. The fund seeks to track the price of gold bullion. Same thing. Okay? The investment seeks to reflect the general performance of gold. It constitutes a simple and cost-effective way. An investment in physical... Okay. This is the line. The advisor intends to constitute a simple and cost-effective means of making an investment similar to an investment in gold. An investment in physical gold requires expensive and sometimes complicated arrangements in connection with the assay, transportation, warehousing, and insurance of the metal. Although the shares are not the exact equivalent of an investment in gold, they provide investors with an alternative that allows a level of participation in the gold market. I thought that was interesting because when you go to GLD, and again, I'm just pointing this out, I'm not an expert in this stuff, but this says they actually hold gold. So pick your poison, whichever one you want. I do think that gold might be a good hedge against this kind of stuff. But yeah, not to scare you, RSI divergence playing out, gap looming. This is a 30-minute chart. This goes down to 565. Where are we on SPY right now? Again, the 4-hour algorithm still has you in, but SPY is down at, let's see, 582. There's a gap there. You can clearly see a gap down to 567. I'm not saying that we've totally rolled over, but you don't have confirmation in SPY anymore. You have an elevated MACD. It may be very short term because when you go and look at a weekly, we are not extended from the MACD. We are not extended from an RSI standpoint. So the Bollinger Bands were contracted and it went to the downside. You haven't contracted again. So if we just trade a little sideways, won't be a bad thing. But again, the bond market is ruling and there are problems with it. So, I will tell you one thing. Go and look up the VIX because the VIX is kind of telling you, if you just look at 1 day, again, with that bond auction, we went up above 20. It's kind of telling you it's coming down because the jobs thing turned out to be good. But again, the VIX above 20 Maybe you want to start nibbling because that might mean that, hey, we could go down. But the bond market above 4.5, I'd be a little more cautious about adding long term. I think you might be able to get better opportunities. It's just my thought. Just my thought. Keep an eye on your charts. You know, again, the 4-hour algorithm, if we just look at VOO, which is my preferred S&P, 4-hour algorithm still has you in. I wouldn't be buying because I would wait for that MACD to kind of cross down and then look for another entry into this one. That's the way I would be doing it. And news alert, Palantir was awarded a $795 million U.S. Army. $795 million contract. And the stock kind of moved up a little bit. $795 million. Their market cap is $2 billion. Is $284 billion. Okay, $785 million. Again, the PE is 207. You are trading 207 times forward earnings. Financials, they make about $3 billion. So what's 785? Again, it's not. This is super expensive. So just understand what you're buying. I don't have a problem if you want to buy this one. I just want you to know that even when you factor in their growth, which is fantastic, the PEG ratio is 6.69. Remember, a good PEG ratio is under 2. This is 3 times above that. So Palantir is very expensive, even though they're getting contracts and they're growing. Just understand what you're buying into at 121. Apollo, 10 things. These are 10 things that the market needs to overcome. Number 10, Doge laying off government workers. We still haven't seen all of that in the jobs report. Number 9, housing demand. Higher mortgage rates. Number 8, student loan payments, because again, the Biden administration had stopped that. We need to start it, and people will have less money. Number 7, people aren't coming to the U.S. Lower tourism. That's just a fact. Number 6, weak consumer confidence. Number 5, consumer spending slowing. Walmart said it. Number 4, high uncertainty for business planning and weak corporate confidence. If you can't be sure of what's ahead because the administration keeps moving those tariffs, you're not going to invest. Number 3, trade deal uncertainty. Number 2, ongoing negative impact of tariffs. Number 1, the Moody's downgrade is going to hang over the market. All 3 of the credit agencies have it against. Those are 10 things that would tell you, hey, just be cautious. Doesn't mean don't get out of the market, but just be cautious. I think that was very well put. So these 5 stocks just broke the Weinstein stage 2. There is a Trendspider sale going on. I would urge you, go and Google Weinstein, go and look at the Weinstein indicator, but it is a tried and true way of trading. When you get to stage 2, you could see a breakout. And here are 5 names. So again, go and get the indicator in Trendspider. You can sign up for Trendspider by going over to the link tree right here. The link is down below, linktr.ee/daily stock pick. It is the first one. And you get to Trendspider right here. You can sign up for a special offer. Again, one tool, it has everything that you need. When you sign up, you can take a 2-week trial for $7 freaking. Sign up for an annual plan and you'll get the 4-hour algorithm. But you can try this Weinstein stuff on stocks that you currently have. Okay? Go and take it for a test drive. Look at your portfolio. Look at where the stocks are in the Weinstein analysis and decide, do I want to get out of them because they're in a stage 3 or a stage 4? Do I want to get into them? And you can read all about the Weinstein stuff right here. And you can import it into your Trendspider. Okay? First stock, Spotfiy. 11 trades. This is tested on that strategy. 11 trades, 64% win rate, 25% average return. Okay? Chewy, 7 trades. Okay? 57% win rate, 17% average return. Again, that's on stage 2. They're entering this stage 2. Booking Holdings, 48 trades, 38% win rate. So you don't get a great win rate. 11.69 average return, though. As you enter stage 2, maybe it's worth it for an 11.69. CrowdStrike, they have earnings coming up. 10 trades, 60% win rate. You win 6 out of 10 times. Average return, 21%. Microsoft, 80 trades, 39% win rate. 6%. I wouldn't be buying Microsoft at that high price. But again, if it's a pattern that you like and Weinstein has proven out, go and test the strategy. This is something you can get by just signing up for Trendspider through Linktree. Again, $7 freaking. Now, there was big news in Apple world yesterday, and Apple is a huge, by far, my number 1 position. I have tens of thousands of shares of Apple. And Sam Altman, he was meeting with Johnny Ives. We knew this. I mean, it was out there that they were meeting and that they were working on a device, blah, blah, blah. OpenAI just changed the game yesterday by buying the Johnny Ives actual company. Okay? They are focused on disrupting hardware. And remember, Apple is the hardware. Sam Altman is like Zuckerberg. Zuckerberg is so anti-Apple because they've disrupted his business. Sam doesn't want OpenAI on an Apple device. He wants an OpenAI device. And so they changed the game by buying Johnny Ives, and they're working on a device. Doesn't mean it's going to be an iPhone. But they think within the next 10 years, the iPhone's going to be out and you won't have an iPhone. Where does that put Apple? That's the danger in Apple. Okay? That's the danger. Former Apple exec Johnny Ives joins OpenAI in $6.5 billion blockbuster deal. That first one that I showed you is a video of Sam and Johnny talking about this. The IO team focused on developing products that inspire, empower, and enable will now merge with OpenAI to work more intimately with the research, engineering, and product teams. Johnny Ives comes with an Apple team that developed the legendary Apple products. That's a problem for Apple. Okay? The 9-minute video that I just showed you describes the acquisition, the partnership, and the first new products from the deal will be shown next year. It's big. It is big. Mark Gurman is the leading Apple analyst. Mind-blowing for anybody who has followed Apple for the last decade. It is a loss for Apple, a huge loss for Apple. Go and read his article on this, but it is eye-opening. It is something that just raises red flags for anybody that follows Apple. Okay? Apple WWDC is coming up. Let's take a look at the chart because, again, the only thing that matters to us is the price of Apple and the narrative. Now, the 4-hour algorithm got you out with a 3% loss. I trade this one where I want to enter Apple when the 4-hour algorithm tells me to. Now, over the past 2 years, the 4-hour algorithm hasn't worked on this stock. It has made you 17.7%, but buying and holding has made you the same exact amount. You only win 34% of the time. It's 32 trades over 24 months, and you're getting a signal that we're heading to weakness. Where's the first level of support? It's going to be at the 200-day at 180. This one on a weekly has not been under the 200-day, not even at COVID, all the way back to 2016. Okay? It's not there yet. Again, you're at 200. You still have 10% down to get to there. But April 24th, the low, to the July 24th high, it was WWDC and Apple Intelligence. I had said, hey, this may be the route that we're taking. It's not. We're down. Remember, last year's WWDC was a lie. They told us Apple Intelligence was going to come out on the iPhone. It didn't. but the WWDC is coming up in 8 or 9 days. They are going to have to put something in there that nobody is expecting. It would be shocking, but it won't be a bad move if they go out and buy something like Claude AI and then make that Siri. Right now, we know that Siri is in a disaster. They are all hands on deck. I'm not saying that it's likely that they're going to buy something, but this company has a ton of cash on hand. And they have a ton. They need to do something to get the market's attention. It's clear Apple has the in-house talent, but they also have had issues with the talent leaving. It's got a super high PE. Take a look at Apple. I mean, this is a full look at Apple the way I look at it. The valuation is an F. Why? Because you're paying 28 times forward earnings. We just talked about Palantir having like a 600 PE. The growth, though, at least Palantir has the growth. This is growing at 4.9% revenue year over year. 5.86 is what the sector's growing at. This is the #1 held stock in the world. Okay? With the talent, the PE, the threats to its service revenue from the Epic Games decision. Again, remember, they take 30% of any app money that comes out of the App Store. Well, that was just threatened because you can sideload some of the other app stores. Stagnant iPhone sales. I mean, again, have they come out with anything other than a better camera? I'm on a 13 Pro, and I'm an Apple fanboy. Revenue growth year over year being limited. They need to shake things up. Tim Cook is a great leader. He's a great CEO. I do have faith, but this is scary at this point. And that move yesterday by Sam Altman was basically playing chess and saying, hey, it's your move. It's not checkmate yet. Next year when they come out with a device, remember, Sam Altman in OpenAI was an investor in Humane with that little button that you put on. It was a joke. It was an absolute joke. So, again, my biggest position is Apple. I have my cards pushed forward. Am I adding to it right now? No. I would wait until WWDC. You can look at the weekly here. The MACD is well below here. Are we falling into some type of, death spiral? No way. They still have tons and tons of money. But this particular move, it's scary because you don't want to be caught in the death spiral when the actual iPhone and the actual ecosystem starts to crumble. So just be aware of that. And I have been very clear. I sold at 260, I sold at 240, I sold at 220, and I sold some at 200. I haven't sold any under 200. I do think that the fair price of Apple is 200. I don't want to sell it under that. But as we start to go down and I start to see these things crumble and the narrative comes out as I don't buy new Apple products, that's where it gets a little scary. Again, it's social arbitrage. It's me saying, could I be moved away from the Apple ecosystem? Maybe. I normally say stay away from IPOs. And again, I'm not a big IPO guy because I'd like to see what the company does, what the market's reaction is. But it's clear. I mean, it is super, super clear. This one in particular, I mean, just look at the 4-hour algorithm. We don't have a lot of moving averages. That's up 166% in 28 days. 28 days. CoreWeave. You may say, well, what is CoreWeave? CoreWeave rents the GPUs. So if you're a company and you need GPU access, CoreWeave is the one that you go to. It's the largest. It was up 20% yesterday. It's showing that there's huge demand for this GPU rental market. It's showing strength in a market that was down. It is up 200% since it IPO'd. You can't ignore this name. You can't ignore it. Throw it on a watch list and find a strategy that you can trade it with, maybe on a shorter term, because it is expensive. It is super, super expensive. When we go to valuation, we look at it, they're not making money. You know, when we go to growth, it's fantastic. 736% revenue growth year over year. We just saw that Apple's only growing at 4%. So while I normally say stay away from it, you might want to think about it. You know, it might be something to put on a watch list. One that I'm big on, NVIDIA. They have earnings coming up next week. And Loop Capital threw a $175 price target on it. They are going to make money. It's just a matter of how much they're going to grow. The quant hates this thing. The quant gives it a valuation of F. And we can go in with analyze with AI and look. Wall Street says it's a strong buy. And that $175 price target, the average price target on the street is 162. They barely chased this down. They went from 172 average price target a couple months ago down to 163. Again, they are making fantastic money. The revenue growth year over year, 114%. That's the issue. Can a $3 trillion company that brings in this much money continue to grow at that rate? That's hard. So maybe you don't want to invest in this one. You know, for me, risk reward on this one is fantastic. It's at the lower rate. It's not at its 52-week high. You know, it doesn't have a huge short interest. Nobody's shorting this one saying it's going to go down 1%. But the $3 trillion market cap does hold, you know, it's over its head. But look at the power that it has, okay? It announced a partnership with Navitas Semiconductor, NVTS. NVTS right there, it is up 160%. This was up almost 200%. Expect a huge, huge market reaction when the market opens. Let's go to a 5-minute chart because I want to see yesterday. Look at that. Okay. Market was interested in it, came up there after hours. Boom. Play confirmation. You can trade this one. This is going to have huge amounts of volume when the market opens. So just keep an eye on it. I did put out, and FYI, perfectly on it, I stole this one. So this is United Healthcare on my Instagram. I threw my logo down there, but it was, I think, Daily Stock Market or something put it up there. Great little 2-minute, 3-minute video about what happened. We are the only country in the world that puts in almost a private equity position in our healthcare. The only way for United Healthcare to actually make money is to either charge more, and Congress and the administration won't let that happen, or to cut expenses, which means denying claims. Then you have a PR nightmare. So it's a no-go for me. It was brought back down with the report that they were actually paying bonuses to nursing homes to not send patients to the hospitals. So it's let's see, it's down 3% again at 293. The algorithm got you in at 320. I said I wouldn't take it. I am not interested in this until it gets between 450 and 550. I want to take it when it's actually moving positive. I don't want something that's under its 9-day. I'm not going to catch the falling knife. Just my preferred position. But that's it. Now, say you want some safety, because I just scared the hell out of you. Utilities. Here are 3 utility stocks with reliable dividends. And Steve Kress goes over this. He goes over them in fine detail. Go and read the article. How you trading at up 1% in pre-market. Again, in a down market, this one's moving up. They're going to begin testing ads in their AI search. So what has happened, and we've seen this, when you go to Google, you get that AI summary up top. That usually provides you enough to where you don't go down to the links. And that's been the problem, okay? When you don't click on the link that is sponsored, Google doesn't get paid just for serving it up to you. They get paid for actually the click, okay? And that's where they make their money. So Google, if you haven't seen this, scroll around social media, okay? Because just go to Twitter. You will see example of Google's new video AI. It's unbelievable. It's impossible today to tell the difference between real and fake. Literally, I couldn't tell real or fake. There are plenty of options out there. I saw a street interview. I saw a comedian performing. This would fool me. Google has monetized this because creators, they're saying they went through all of their $250 credit because it's $250 a month. So to create like one or two high quality videos, it's costing them $250. But if you have an audience, okay, a creator who has an audience is going to pony up more money, and they're monetizing it that way. So not only does Google get paid, but then if the creator can turn that into content where they get paid as well, that's bullish. So am I more bullish on Google? No. I still think it's a hold. I still think it's a hold. The reason is the street is going to focus on just the search. So the algorithm had a great buy at 166. You're up at 170 right now. We've talked about this range between 200 and 150. Again, 200, that 193 level just seems to be, you've got a gap up here. Do you get up there? I don't think that the street does. But with the low PE on Google, Google is the cheapest of the Mag 7, and the valuation still seems expensive. That's the issue. You know, nobody wants the Mag 7, blah, 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 the whole thing. Now, if you want to talk about good management decision, it's the new CEO of Nike. Doesn't mean that Nike's an automatic buy right here, but they just got added back to Amazon. Why? Everybody else is handing them the dish. They are just doing super poorly. I think this is more beneficial for Amazon than it is Nike. But it puts Nike in front of more people. And I like that. Their new CEO, I like that he's implementing things to put Nike in front of more people. And it's a good management decision. Do I want to buy Nike? No. I want to buy Nike when it actually starts to turn around. And right now on that weekly, you still haven't broken this lower low. I mean, any trend line that you put on this one, it's still a lower low. And it's super expensive. Because if you go to Nike and you look at the valuation, you're paying 28 times forward earnings for this stock. It's expensive. And its growth minus 7%. You're better off buying Apple at that point. So know what you're buying, know how to look at it, and understand exactly what these headlines are, because the headlines are just headlines. Go in deeper, look at the stock price, because at the end of the day, this chart's not going to have an opinion. Every article that you read is going to be an opinion. Even though the PE is high and they're not growing, maybe you have a thought that that's a good opportunity to buy. Again, thesis matters. Just like Bitcoin, it hit an all-time high of 109 yesterday. By the way, pre-market, it's at 111,000. What was a prediction that I said earlier this year? It will hit 150,000 at some point in time. Your buy under 100,000. Is it too late to buy it now? You're at all-time freaking highs. If you are willing to buy this at 111,000 right now, why didn't you buy it at 70,000 a little while ago? My preferred is IBIT, and we will go over that at the end of this podcast. Okay? We'll go over a little bit more because I did scan the 4-hour algorithm on the core portfolio. We'll go over it. Snowflake. I said yesterday, Snowflake, it trades. I mean, this can't be even. Hopefully you invested in this one, because when you look at a weekly chart, this just trades in this range going back 5 years. What? No, 4 years. 4 years. December 2021. It trades in this range, and it has bounced. And they had earnings yesterday, and they're popping 10%. I got rid of mine at 193. It's never a major position. This is play money. What do? I buy in this range down low. And then as it enters 200, I sell. I've done this multiple times and I've made a good chunk of change. They popped because they topped estimates and they guided forward. It's expensive. It's a hold in the quant. Why? It's based on valuation. You're paying 154 times forward earnings. From internet service infrastructure, there are better ones out there. Twilio, Fastly, Okta. Okta's one that I like. Again, valuation, you're paying 38 times forward earnings. It's a little bit better than Snowflake. So understand what you're buying. Because Snowflake jumped as Wall Street praises sales changes, new products. It's still expensive. I would still say you're in this range. Until you can break above that 200-day on the weekly and sustain it, you are still in that range. So again, for me, I sold it. I'm out of it. One that I really love, Urban Outfitters up 19%. This is a top 2025 Seeking Alpha stock. You know, and if you got into these in the, at the beginning of the year, look at this yearly performance. LRN up 50%, Opfi up 47%, AGX up 40%, CLS, Celestica up 23%, EAT up 9%, Urban Outfitters up 9%, and that's up 20% today. DXPE up 3%. You got three that are down. Credo, Inta, and PayPal. PayPal, I wouldn't touch. Inta and Credo, I think those two have opportunities to pop. But again, this is the top 2025 stocks. How do you get all this? Okay? How do I know about Okta? How do I know about other stuff? Go over to Linktree, click on this link, the second link right there. It is a bundle. It gets you premium, which you've seen me use the quant. You know, we can go into, you want to see about, let's see, what do we say, Snowflake? You want to analyze it with AI? You get a full analyst report right here with AI. Who's its competitors? Amazon, I'd rather own that one. Microsoft, I'd rather own that one. Google, I'd rather own that one. Then you go into the metrics. Snowflake is significantly overvalued compared to its peers. The price book to book ratio is 20. It goes over everything for you. Brings up all of the positives. Brings up all the negatives. Okay, and you can even see the earnings transcripts and you can have them read to you. You can listen to the calls. Again, Seeking Alpha Premium is a fantastic service. You have two choices. You can get it in the bundle or you can get it by itself. You can do a 7-day trial and get $30 off. I suggest the bundle. Why? Because the bundle comes with the Alpha Picks portfolio, which greatly outperforms the S&P. It's a stock on the 1st and the 15th of each month. It's great. And Urban Outfitters was one that is a top stock. So this came with Seeking Alpha Premium. If you were a member in January, you got an alert and a full webinar from Steve Kress saying, hey, these are great stocks. And in 2023 and 2024, we have outperformed the market. We've made 100, I think it was like 170% somewhere, some crazy number that they were making just on 10 stocks where you just bought and held for the year. And Urban Outfitters, it's not even one of the best ones, but it's up 20% after killing it on earnings. So I like that one. And again, that's the year-to-date performance. Now, Canada Goose went crazy yesterday. Went crazy. I noticed this one, and it's got strong Q4 earnings. Well, is this one you want to get into? GOOS. Let's look at it. Okay, this is how you evaluate a stock. This one dipped down to $7.59. The 4-hour algorithm, the bad news is it loses you 15% over the last 2 years. 32 positions over 24 months. You lose 63% of the time. The good news is if you bought and held this one, you're down 44%. We got an earnings gap up. You're going to have a huge earnings gap up from yesterday. So where are you right now? You're at $10.66. Let's take a look at it from a long-term standpoint. Is this one you want to invest in? Well, the 50 days moving negative, the 200 days moving negative, the 9-day just turned around. Is that enough to push you into this stock? Well, if I go over here and look at it, let's see what the quant says. The quant says hold. Wall Street says hold. Seeking alpha analyst. Right here, this is all I need to see. But maybe you want to go into depth because you love down. You love Canadian down. Well, let's look at the valuation. It's 16 times forward earnings. The PEG ratio, which we talked about Palantir being too much, it's decent. It's got a 1.1. Its growth, year over year, they're growing revenue by 4%. So is Apple. Profitability, 68% gross profit margin. Momentum, which tracks the stock's actual price. Short term, it's doing great. 6 months, you're up 12%. 3 months, you're up 2%. Slowing down a little. And long term, it just hasn't worked out. Revisions, analysts are bringing it down. Well, there's 1 up, 0 down, 4 up. Again, analyze with AI. Let's look at when this was printed. The last virtual analyst report, 5/22 at 4:45 a.m. So this includes their actual most recent. You can look at their competitors. You can go in here and see the explanation. Goose presents a mixed valuation, while its PEG ratio indicates a 51% discount compared to the sector, suggesting underpricing. Its price to book of 2.52 is 26% higher than the sector. Does this provide an opportunity? I don't think so. Not my thing. We're heading into summer. Who needs down in the summer? I don't know about their products. But again, it wouldn't present anything to me. That's how I look at stocks. That's 101 how I look at stocks. And that's how I came up with that watch list. Okay, that watch list right there, 5 high growth stocks that you can invest in that I'm looking to buy. That's how I did it. Now, I told you we're going to talk about Bitcoin. Bitcoin sets new high, topping at 111,000. We can go and look at the chart here in Seeking Alpha. You can look at 1 year, it's up 61%. Year to date, you're up 17%. Again, if you didn't buy this under 100,000, don't go chasing it. Because when you look at the 52-week range, you are at all-time highs right now. Doesn't make sense. If your risk tolerance is, hey, I'm going to lose 50% of my money, that's fine. But what was interesting was I went to the market scanner, okay? And I said, let's see, the market scanner. Let's just go in here. We're going to look at a scanner, and we're going to look at the Daily Stock Pick scanner, the number 1. And so it's scanning the core portfolio for any entry in the 4-hour algorithm. It actually did it earlier, but it did IBIT. And I know the entry. And so, yes, there is an entry in this 4-hour algorithm. Let's go back to the core portfolio right there. And there is an entry in IBIT. Now, do you want to buy this one? My preference is within this range. Okay, I have identified this range. Down below this, I was entering every time that the algorithm told me. The algorithm makes you 37%. Versus buy and hold makes you 1,117%. Oh, I'm sorry, 117%, not 1,000. 18 positions over 16 months because the ETF is only 16 months old. It's not very old. You win 33% of the time. I was looking at this as the range to add. Now, when it got this under the 200-day, was I adding larger? No, I was worried. So I was adding smaller. Did I do a whole, go balls deep at 47? No. But I like the fact that today you got another indication that it could move higher from the entry in the 4-hour algorithm. Now, if you don't want to trade this one and you want to use the 4-hour algorithm to trade something, MicroStrategy, okay? MicroStrategy is a leveraged ETF on Bitcoin. That's the way I describe it. Remember, Michael Saylor is not selling his Bitcoin. He is issuing more bonds and grabbing more money from investors to try and buy more Bitcoin. And so it's just a one big Ponzi scheme. Now, over 24 months, the 4-hour algorithm has 21 positions in this one. So if you want to trade something around Bitcoin, this would be where I would point you. MSTR, you make 2,307% over those 21 positions. If you bought and held, you made 1,300%, 1,340. So again, understand what you're looking at. The 4-hour algorithm, for me, is the way to go on this one. It's tried and true. So if you want Trendspider, just go over here to the top link. Again, it's on sale. You will get my 4-hour algorithm when you sign up for an annual plan, but go and test it. We talked about the Weinstein analysis. Again, you can go and look at that. It's a great, great tool. So good luck in the markets. I will be back tomorrow. If you have any questions, hit me up. I will talk to you tomorrow. See you. Bye. Okay. Now let me throw this into iMovie. And then hey, Brittany bitch is back. I almost wrote to you the other day to find out if everything was okay, because I know your company is buying Tesla semis, and I thought maybe you got the access to one of those Tesla semis. And I told you, I am flying to you if you get access to one of those Tesla semis that I can ride in. Although it's one seat, so it's like, I don't know if I'll even be able to get in there, because Pepsi's probably going to be like, non-employee? No way.
Good morning.
Okay, let me just cut this one. Okay, let me do green screen. Then I'll go read your comments. And I've reached my limit on Perplexity, by the way. It keeps yelling at me to subscribe. It's kind of funny. Because I use it so much. I probably should subscribe. I mean, honestly, I could just do it on the business and write it off. Because as Kramer says, it's a write-off. That's what they do. 522 pod. Shit, the market's already open. Oh, he retracted his message? Let me look at your comments now. I like NVIDIA, Chris. I may actually play the leveraged ETF on NVIDIA. 2 new IPOs. When are you starting the daily grass tips pod? I don't know. I'll go out and take a picture of my lawn with the golf ball on it, because my friends do say it looks better than any county course. It is not quite a PGA Tour grass, but I would say it's on par with most golf courses. Now, it's not like that all over. Again, I've got, like, next to my sidewalk, I've got drainage spouts that erode the soil, so I can't even keep soil there. I've got to fill in with some rocks and stuff. So there are definitely issues, but oh, is he telling people to buy stocks again this morning? Let me see. Shit, Brian, man, you got the schedule. I mean, between school, work, 12 kids that I know of? I don't know how you have time to even jump on here. I just appreciate you continuing to listen. Well, I'm up. How the hell am I up? Hold on. Apple's down and I'm up? There is no way. No way. Hold on, I gotta look at this. Oh, I guess it's not that bad. So Microsoft is carrying me. Yeah, Microsoft is pushing. Huh. I don't have anywhere near enough Microsoft to overcome, but between the alpha pick stuff, let me see this, because this might yeah, so I've trimmed a lot of Apple in my retirement account. Google, I have a huge position in Google in my retirement account. That's pushing me up. iBit, very large position in iBit. Palo Alto Networks pushing me up, a good sized position in that, which was way down yesterday. And then QQQ and QQQM. So I'm doing well in my in some accounts. Okay. Oh, it looks like I'm going hiking next week, so. Let's see. Trump telling people to buy stocks. I mean, if he tells you to buy stocks, buy stocks. The problem is the bond market. He's going to tell you to buy stocks. The problem is the bond market's going to tell you not to buy stocks. And I trust the bond market at this point. Again, I think we're range bound, and Trump's word can only go so far. And yeah, like Chris says, the charts are telling you different. Apple was a good stock 10 years ago, not anymore. It's $3.5 trillion company. It's very hard to get a good return from it. And yes, you are right. I can't read your first name, and I apologize. I just don't know the language. You may be right, but again, I think it's a $260 stock. And so if they get even close to what Tim Cook's thought process is, I think it's $260 stock. They have enough money to buy back the stock. They could up the dividend. There are many ways that they have been able to manipulate that stock price so that you'll get a better price without increasing the market cap to outrageous numbers. So I don't like it as my number one position right now, but I've sat through 40 and 50% downturns before. But the market cap does worry me. I just don't think that, I think they'll be fine. It's more like here's the thing. Are you going to make more than 4% in a year on Apple? That would be my question, because right now, you're getting 4% on your high interest money market. So where do I want my money? In Apple or in a bond? And that would be the question that I would pose to people is, I think Apple is a safer bet than bonds. I also think it's a very safe stock where it's probably not going to 150. But is it going to, 400? No. GGLL. What the hell is GGLL? Doesn't trade on the 4-hour real well. Let's look at the 65-minute. Nope, that one doesn't trade well either. The 1-hour stock battle, let's go back 60 days. That one doesn't trade well either. I mean, it's the downturn. It's this, it's that kind of back and forth. So it's hard to find something on Google, like a double leveraged Google that actually trades well. Yeah. Oh, by the way, I didn't even bring up Webull. But let's see. Webull, which is basically iBit, is now at 12,000. So well, I mean, listen, when you're buying S&P, I mean, I have news for you. The number one position is Apple. So are you buying better? Are you're still buying Apple? I mean, 6 out of every $10 in VOO is Apple. So, I mean, what you're saying is if you could get an ETF without Apple, you'd like that. And I'm sure there's plenty out there. So I'm just not willing to, say that Apple is dead. I'm just saying there's some dangers there. There are some dangers. So, yeah, but Chris, do you have a strategy that works on it? I mean, obviously you can trade it probably, with some momentum and some volume kind of stuff in there, but I don't have a strategy that works. You do have a gap up here between 46 and 52. Do you have a gap on Google? You do. Between 193 and 205 after their earnings. This gap is getting filled right there at 174. Yeah, I mean, if you want to own VOO over, putting it into bonds or owning Apple, I can't argue with you. Let's see, NVTS. I thought when the market opened that would spike. Let's see, let's go to a 5-minute. It hasn't spiked. I mean, people are getting out of it. At $5, it's expensive. I mean, again, it's just hype. Okay, I'm going to get out of here. My export is done, so I got to start uploading stuff. I will talk to you guys tomorrow. Have a great night. Oh, that's what you do. Okay. Yeah, I think, let me see my 4-hour on Google. I don't even think it works on Google, to be honest with you. Google, for me, has been a buy and hold. Yeah, my 4-hour doesn't work on Google either. Let's see the 1-hour on Google. No, that one doesn't work. 65-minute. Nope. I don't have a good strategy for Google. But I've been more a buy and hold on Google. And I have trimmed it significantly. Okay. I'm out. See you guys. Have a great day. Enjoy yourselves.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Listen now. Every morning I wake up to the sound of the trade.